afternoon, everybody. Thank you for being patient. I'm Lisa Poff. I'm project coordinator with the Indiana Deafblind Services Project, and I want to welcome everybody to today's virtual workshop, Benefits and Work Incentive Planning. At this point, I'm going to turn this over to our speaker today, Janet Steveley. She's with Griffin Hammis Associates, and she knows a lot about benefits and work incentive planning. So go right ahead, Janet.
Well, thank you, Lisa, and hello and welcome everybody. Thank you for joining today. Like Lisa said, I'm with Griffin Hammis Associates, which is a consulting firm that focuses on customized employment. But what we find is through our work, customized employment involves, finding people work that both matches them, what their skills and interests and conditions of employment, but also meets an employer need. So we're looking at that win-win, and even by federal definition, customized employment is to use flexible strategies. And what we find is sometimes those flexible strategies require some resources beyond what maybe people have available to them. And a lot of people have resources through voc rehab or through Medicaid waiver services, but sometimes there's just things that we need to purchase that kind of are beyond that scope. And so one of the things we do is look at how to use the work incentive programs, the Social Security work incentive programs to get to some of those flexible strategies. So I'm a former teacher and transition specialist, and I worked at the Helen Keller National Center for a number of years, which is how I got to know Lisa. I actually lived in Indiana for 3 years and worked at, I can't remember what they call it now. I think it's the Center for Community Living and Careers. It was called something different when I was there. But I'm also a certified partner work incentive coordinator. And benefits has always been something that has interested me. When I was a teacher and transition specialist, families would often have a lot of questions early on, usually about how to get on benefits. But then the conversation would shift. Wait a minute, we want my son or daughter to work, and then what happens to benefits if you have wages coming in? So those are some of the things that we'll cover today. The other thing I just want to tell you about me is one of my favorite things to do is to help people with what are called PASS plans. And PASS stands for Plan to Achieve Self-Support, and it's one of the Social Security work incentives that can really help people get funding for things that they need to use towards their work goals. So today we want to talk about, what benefits plan and work incentive planning is and why it's important. And underneath the umbrella of the Social Security Administration, there are two very different cash benefit programs. One is called Supplemental Security Income, or SSI, and the other one's called Social Security Disability Insurance, or SSDI. And they're very different programs with different purposes and different eligibility criteria. And the way that earnings impact those benefits is completely different between the two things. So one of the things I really want you to walk away with today is kind of a good idea of the differences between those two programs. And then we're going to talk about how earned income affects both of those, and what work incentives might be applied to each of them. So work incentives are programs that help people try out work, or help them keep benefits longer, or help people keep medical insurance even though maybe their cash payments go away. So they're really, really important, right? And I also just want you to be aware of resources for individualized benefits counseling, because everybody's situation is a little different. And it's hard when you get a whole bunch of info to sift out what's really specific to you or to the person that you're thinking about right now. But I will say we do have 3 family sessions scheduled where you can call in, and we'll have small groups where we can really talk about individual situation or answer a lot of specific questions. So I hope you'll participate in those too. So first is, why is benefits and work incentive planning important? And first of all, I'll just say there's a lot of bad rumors out there about benefits. So, you might be thinking about going back to work, or somebody might be interested in going back to work. And then they'll say, oh, but my Uncle John he was on disability and he went back to work and he got all messed up and he owed lots of money back. And, so there's all these bad stories out there. But actually, the truth is that people can work and can continue receiving benefits, but possibly can continue receiving cash benefits, and they most all the time can continue receiving medical benefits, which is often a bigger concern. So in a lot of those stories, those myths might have been based in some truth back a long time ago, but Social Security has been really good about implementing work incentives that help people go off benefits gradually. So there's some safety nets there and some ways to get back on and things like that didn't used to exist. The other thing, another reason that benefits planning is important is because, people tend to focus on the loss of benefits. It's like, oh, if my son or daughter goes to work, they're going to lose this. But really what we should be focusing on is overall income and really what people have to spend and their purchasing power and their quality of life. So sometimes, yes, especially with SSI, there might be a loss of benefit, but there's an overall gain, and we've got to keep that in sight. Also, it's important because of the safety nets that work incentives bring. And again, it can help people keep benefits, keep them longer, or continue medical insurance. It's also really important, especially with young people who are just starting work, maybe for the first time, that both they and their representative payees, if they have them, understand the reporting requirements, because it's not work that gets people into overpayment status. It's not reporting that gets people into overpayment status. So understanding the reporting requirements, and they're different from SSI and SSDI. So that's a really important thing. And then lastly, that we want to understand what resources people have as we're planning about the future in employment. And there's a couple of the Social Security work incentives, particularly PASS and Ticket to Work, that can really help people. So we'll end on that. Some of you may have participated in the customized employment training I did last month. And if you did, you might remember when we talk about customized employment, we talk about negotiated jobs, which require some negotiation with the employer, maybe negotiation around job tasks, or what we call job creation, which is finding unmet employer needs and proposing employment. But we also talked about a twist on that we call resource ownership. And what that involves is the potential employee bringing something to that work situation or employment relationship that helps the employer do more business so that they have more income, which allows them to hire that person. And a couple of examples I gave were about Scott, whose employer, or Scott, he himself, they negotiated with the employer. The employer said, the employer was a restaurant, and they said, what would help us generate more income is if we didn't purchase desserts from whoever they were purchasing from. If we did our own desserts in-house, there'd be much more of a markup, which could then potentially generate the funds that we need to give Scott more hours. So Scott purchased the ice cream machine with some assistance from Voc Rehab and from a PASS plan and from some multiple sources. He actually kicked in some money himself, as did the employer. And the ice cream machine then allowed more income for the business that paid Scott's wages. So that was a really cool example of resource ownership. Or another gal, Chelsea, who had, really was into technology and into working with kids, that through resource ownership, she was able to purchase a set of iPads that then allowed the school district to hire her to work with young children on learning how to use iPads. So it's sort of it seems a little odd at first, like you might be just buying somebody a job, but lots of us really are required to bring assets with us to work, like a car. Sometimes a vehicle is required, or a college education, or potentially tools in some fields. So And these are the kinds of things that are sort of those odd things where you go, oh yeah, but well, who is going to pay for that? And maybe VR can pay for it, but maybe not. So sometimes using some of the work incentives can help us get things for things like resource ownership. Also with micro enterprise, or what we call a business within a business, that are small businesses where people aren't employees, but maybe need resources for business startup, which would help them get going and help their businesses going. So that's where we find ourselves involved in benefit stuff, is thinking creatively about how to use some of the resources that are attached with those benefits. So let's start by talking about SSI and versus SSDI and what those differences are, because this is where I find people get into trouble a lot, is that they don't understand the rules, or they're confusing the rules to the two programs, or they think they're reporting to Social Security, but they're reporting to the wrong program. So that can get people into trouble. So let's just start by thinking about Social Security as a big umbrella organization with those two programs underneath it. The main differences here are that Social Security disability insurance is an insurance program. And so like with any insurance, you pay into the system, and if you meet certain criteria, then you're eligible to draw benefit back out. So the insurance payments are based on work, and when we pay FICA taxes, some of it goes to Social Security disability insurance. And if people have enough credits to qualify and they become disabled, they can draw a benefit from it. And how much they get depends, because it depends on how much was paid into the system. But they either, whatever amount they get, they either get it or they don't get it. So all or nothing. And whether they get it or not, based on work activity, depends on how much they earn and kind of what phase they're in. And we'll talk about that a little more in a minute. But so Social Security is insurance. The payments are all or nothing. You get it all or you don't get any. And the insurance, the health insurance that comes with that, is Medicare, similar to what we all will receive when we're 65. But Medicare is medical insurance. It's not long-term care insurance. So it covers medical, but it doesn't cover like support services that people need. It also doesn't cover dental. It doesn't cover mental health. It doesn't cover some things, but it's good medical insurance, but it is what it is. SSI, on the other hand, also known as Title 16, is a needs-based program, meaning that people have to have limited income or resources to qualify, limited income and resources to qualify. So it's for people who are elderly, over 65, blind, or disabled, who have income needs. And there's a set federal benefit rate each year. And this year it's $783 a month, which isn't a whole lot of money to live on, but it's meant for basic food and shelter. And so any other income that people have can affect whether they get the whole $783 or not. For instance, if somebody, let's say it's a young adult who's living with family members, but they aren't paying for room and board, SSI will automatically cut it by 1/3. So they get 2/3 of the federal benefit rate and not the whole amount, because the money's meant to pay for food and shelter. So if somebody else is paying for food and shelter, they figure they don't need it. And earned income will adjust your SSI check too, and we'll talk about that as we go. But SSI comes with Medicaid, and Medicaid is different from Medicare, and that Medicaid covers medical insurance, but it's also what funds services like residential services and supported employment services and community access services. So there's a lot tied to Medicaid, and often I find that people are very concerned about losing Medicaid eligibility, particularly if they have personal care needs or higher needs. So I will just say this right now, there are other ways to keep Medicaid, but if you think of Medicaid as a big house with lots of different doors and windows to get in, SSI is one door. So if you receive SSI, that's kind of a automatic into Medicaid. But if that door closes for some reason, there are other doors into Medicaid. And if that's something you're interested in talking about, we can as we get there. So often when I talk to people about this, and I can ask, do you know which benefit you get, SSI or SSDI? And people don't always know. It's like, oh, it comes from Social Security. We don't know. So there's some questions, there's some things you can do to find out. One is that Social Security sends award letters once a year. So if people have an award letter, that would be something to go to see what it says. You can also set up what are called My Social Security accounts. Social Security, like everybody else, is going more and more to online services, and that would probably be a good thing for students to do. And if parents are rep payees, that might be a good thing to do, is to set up those accounts so you have a way of verifying benefits. There's also a report you can get called a Benefits Planning Query, or BPQY for short. And if the person is able to call Social Security themselves or the rep payee to just say, I'd like a copy of my benefits planning query, that will give you information on whether it's SSI or SSDI. But an easy way, and I think maybe some of you are teachers on there, is that true, Lisa? Teachers or school staff?
Yes, some of them.
Okay. Sometimes, you just kind of want the quick answer, right? So a good way to kind of figure it out is, what day of the month does it come on? Because even if people don't know what it is or even how much it is, they know what day it comes. If it comes on the 1st, it's SSI. And you could say, well, if it comes on the 1st and it's exactly $783 a month, it's probably SSI, right? If it comes on any other day of the month, it's probably SSDI, or what I'll call a Title II benefit, because there's actually a few different benefits that fall under Title II. And some people actually get both. They're called concurrent beneficiaries, and they get SSI and SSDI. So they probably get 2 different deposits. They probably get their SSI on the 1st, or they would get their SSI on the 1st, and then their SSDI probably comes on the 3rd, but it could come on a different day. So if somebody tells you they get 2 different deposits, that's probably what's going on. Because I know the Indiana Deafblind Project focuses on school and transition age youth, I'm assuming lots of you work with younger people or attached to younger people in some age. And for the most, this is sort of a generalization, but most younger people are going to get SSI, partly because they haven't worked a lot. They may not qualify up until age 18 because it's based on family income. So they may or may not qualify based on, up to age 18. But at age 18, they'll treat students as a family of one, okay? So now family income isn't counted anymore. So oftentimes, especially if people are still in school and they're not working, they may qualify for SSI because of their own financial need and their disability. Now, one thing I should have told you back when we were talking about SSDI is that SSDI is also called the Title II benefit, and there's really 3 different benefits depending on who the worker is that earned the credits. If I'm the worker that earned the credits, it's called Social Security Disability Insurance. But if I'm a disabled person and my disability started prior to age 22, I can collect the benefit off a parent's claim. It's called a childhood disability benefit, but in terms of everything else when I say SSDI, it all works the same way. So it works just like SSDI. Also, people are able to claim off a spouse's benefit at a certain point on a Title II benefit, and that's called the disabled widow's benefit. So for younger people, think about it, they tend to be SSI because they haven't worked a lot themselves to earn their own Social Security disability insurance credits, and their parents tend to be younger and healthier. But once a parent either retires or becomes disabled themselves or is deceased, young people who get SSI might shift over to SSDI, either based on their own work record or based on their parents' work record. So that shift is going to happen. Most older people with disabilities get SSDI, either because they worked or because their parents have now died or retired or something, you know. So it makes them eligible for that. And there could be advantages to actually planning that shift and making that shift happen earlier. And I'll talk about that as we go through the impact of earned income. So let's look at both of those. I should just pause for a minute. Any questions between, you know, SSI, SSDI kind of generally? We'll get into a little more of the specifics on how working impacts them both. Okay, I'll keep talking, but go ahead and type them in if you have any questions. So let's start with SSDI, or Title II benefits. And I want to talk about impact of wages and also the work incentives that apply to SSDI. So if I'm working, all of us work, right? Or if we're working, we're earning credits, or what they used to call quarters of coverage. And in 2020, this year, and these figures change a little bit, every $1,410 you earn equals 1 credit, but you can only earn 4 credits for a whole year. So by the time you've earned what, a little under $6,000, you've earned all 4 credits for the year, even if maybe you earned them all in the same quarter. Say you worked January, February, March, and you earned enough, you get your 4 credits for the year, but you can't get more than 4 credits for the year. But how many credits you need to qualify for a benefit depends on how old you are. And up to about age 26, you only need 6 credits to qualify. By age 40, people need 40 credits to qualify. So they have to have had 10, by age 40, you have to have had 10 years of work experience to qualify. And on top of that, 5 of those years, or half of those credits, had to be earned within the prior 10 years. So think about that. If somebody had worked and then maybe they took time off and didn't work for 10 years, they might not qualify. Even though they might have had enough credits at one time, maybe too much time has lapsed. But the other thing it says to us, if young people only need 6 credits to qualify, that's not very much. Think about if people, students who work full-time for a summer earn 4 credits in 1 year. So, or let's say a student who has a part-time job who earns about $600 a month is still going to earn 4 credits over a year. So a year and a half of work could make someone eligible for SSDI, or a couple of summers of work even could make somebody eligible. And remember I said with Title II benefits, what happens when you go to work is you either get your whole check or you don't get your whole check. And what decides that is what phase you're in and how much you're earning. So there's 3 different phases, what I'll call the trial work period, the extended period of eligibility, and then beyond the extended period of eligibility. So I'll show you what those look like. But there's a couple other incentives here too about, questions about, well, what happens to your Medicare coverage, and what happens if I go off benefits and I need to go back on. So I'll show you some things related to that. So first, what happens, the first phase, say you've just qualified for Social Security disability benefits or a childhood disability benefit, everybody always gets a 9-month trial work period. That's the first phase. And those 9 months don't have to be consecutive, but they do have to fall within a 60-month rolling window. And what counts as a trial work period is any month that I earn over $910 a month. And these figures change every year. So these are 2020 figures, but next year it'll go up a little bit. It might go up to 920 or something like that. So if I start working and I'm working very part-time and I'm earning less than $910 a month, I'm not even using trial work periods, and I just keep getting my checks. But if I'm earning over 910, I'm using trial work periods, and during that time, I continue to get checks. So during trial work period, people keep getting paid. I keep getting benefits. But once I use my 9th trial work period month, that phase is over. That's over and done, right? So now I go into phase 2, which is called the extended period of eligibility. And now the extended period of eligibility is 36 consecutive months. So before with the trial work, you could kind of hit and miss, right? They didn't have to be consecutive those 9 months. But EPE is a 36 continuous block of time. And what they're looking at now is the person working under or over what they call substantial gainful activity, or SGA. And the current amounts for that are $1,260 a month if you're disabled, and $2,110 if you're blind. So the SGA level for blind people is much higher. And it's partially because of good advocacy on the part of blind people and organizations that support them, like the NBA, NFB. So to meet the blind criteria, their definition is 2200 in the better eye with correction, or field loss limited to less than 6 degrees. So oftentimes, and I used to work for the Helen Keller Center. I've done a lot of work for blind organizations here in Oregon and in some other states. And I often find that people who are blind are not necessarily coded with Social Security as blind. So if you do think you're working with somebody who meets the criteria of statutory blindness, you might want to check that, because it takes a while to get it switched once they find out. And I think part of the reason is maybe I've worked with people who maybe didn't meet that vision requirement when they first applied for benefits, and then their vision got worse progressively. But if you know of people that do meet that, have them check it, because there's a lot of advantages in terms of Social Security benefits to be coded as blind, and we need to just help people do that. So you're back in EPE. So every month they're looking, are you making over SGA or under SGA? If you're making under SGA, checks keep coming. But if you're making over SGA, checks suspend. And suspend is different than terminate, because you're still on the program. During that 36 months, they're going to keep you on the program and kind of see what happens. So it's sort of a safety net, again, to keep you on, so that if you can't keep working, all you have to do is call and say, I'm not earning SGA anymore, and checks will start again. So, and that's a difference between suspension and determination. So we got that. So think of trial work as a safety net period. You get to try work, checks keep coming. During EPE, the extended period of eligibility, you got a whole number of 3 years where, yes, cash benefits will suspend in months that you're making a reasonable amount of money, but it's very easy to get back on if things change. So it's another safety net period. What happens, though, beyond the extended period of eligibility is that countable earnings over SGA can terminate benefits. I shouldn't say will there, I'll say can. So when you think about it, the way people qualify for Social Security disability is they have to have a disability, but their disability also has to impact their ability to work and earn substantial gainful activity, which is $12.60 a month this year. So if they're demonstrating that they can consistently earn over $12.60 a month, they don't meet the second part of the definition anymore. So it will trigger a termination of benefits. But if that happens, there's still a couple more safety nets. A, that they continue their Medicare coverage for almost 8 years past the end of their trial work period. So, so they had their trial work period 9 months and then another 93 months. So we're talking like 8.5 years. The other big safety net out there is what's called expedited reinstatement of benefits. And this didn't used to exist. So when I say that there's bad stories and myths out there, this is kind of one of them. It used to be if you went off of benefits and then you had to go back on for some reason, you had to reapply. And when you initially apply for a new claim, there's a 5-month wait period. And really it's almost 6 months before you get a check. And not many people can do that. So what happens with expedited reinstatement, which is a newer work incentive, is that they actually pay you 6 months of provisional payments while they figure out if you still qualify or not. And at this stage in the game, that it's a little different than initial applications. So with initial applications, you kind of have to prove that you meet the medical definition. With expedited reinstatement, it's more like Social Security has to prove that you don't meet the medical definition. So it changes the onus of proof from you to them. It also, that 6 months of provisional payments, even if they find that you don't qualify, you don't have to pay those back unless it was like, serious fraud or something like that. So that expedited reinstatement has been one of the big improvements in the work incentive programs. So if you think about it kind of like a timeline, you'll see here the trial work period again. It's that $9.10 a month they're looking at, and the months don't have to be consecutive. Like in this case, let's say like somebody used 4 months there, and then they took a break, and then they worked 5 more months at over the 9.10, and that constituted their trial work period. So that's over and gone. They go into the extended period eligibility, which again is 36 months consecutive, and they're going to pay you in months where you're under SGA, but not over SGA. So it's really just out here where it could trigger a termination. I actually don't know if you can see my cursor when I do that, but beyond the extended period of eligibility. And I know this stuff is probably, if this is new to you, it's probably clear as mud. Every time you hear it, you hear a little more each time. So if this is new to you, don't worry so much about the details about just the big concepts. That with Social Security disability, it's insurance. You either get it or you don't get your payment, and it comes with Medicare. Okay? Let's do a little practice though. I'm going to show you some examples. So can we unmute people for this one? Lisa?
Yes, we can.
Okay.
Or they can.
So I'm going to show you some examples, and I want to ask you questions about each one. Have they used their trial work period? Are they in their extended period of eligibility? And are they going to receive a check this month? So let's look first at Jane. And Jane gets $1,000 a month in an SSDI benefit. And she used her first 2 trial work periods last summer. And she's now starting a new job working and earning $600 a month. So what we want to know is what happens to her SSDI, right? So is she in her trial work period?
She's not using any more because she's still not making the $9.10 a month.
Very good, right. She is in her trial work period still, but this month isn't going to count as a trial work period because she's not hitting the 9.10. Right? So she's not in her EPE because she hasn't finished her trial work period. And will she get a check this month?
Yes.
Yes, right. So as long as, if she's working and earning under the trial work period amount, she's gonna keep getting checks. Okay, here's another person. Edward receives $960 a month in a childhood disability benefit. So the only difference is that it's paid on a parent. You know, the parent was the worker instead of Edward being the worker whose claim he's qualifying under. And he's worked for 18 consecutive months, earning $950 a month. So is he in his trial work period?
No, he's already used all of the trial work period months. He would still be
Right.
considered in his EPE though, because he hasn't
Correct. He's
reached
still in
the
his EPE?
SGA.
Yep. And will he get a check this month?
Yes.
Yes. So see how that works? He's in, if I go back, he's used his trial work period months. He's worked another 9 months, but he's continued to get checks during those months because he's under the SGA amount. So it doesn't suspend until he goes over SGA. Okay, I think we have one more. Okay, Rachel's eligible for $850 a month in SSDI benefits. She has worked the past 2 years, earning over $1,400 a month. So what happens to her Title II benefits? So first, has she used her trial work period?
Yes.
Yeah.
She's
Well, we don't know. See, the trial work period, the level, oh wait, she's earning.
It says she's earning $1,400 a month, which would be over the
I was
19.
looking at the wrong figure. So $1,400 a month. Yes, she's over her trial work amount. So we'll assume she's used her trial work period. Is she in her extended period of eligibility?
Yes, she's in the EPE, but
And does she get a check this month?
no. Wait.
Not if she's disabled, but if
Yeah.
she's blind, does that change things?
Then she would.
Then she would. Yeah. Right, because we've got that higher SGA level for people who are blind. So, and one of the things with her I would look at, if she's not blind, she's over, but she's only a little bit over, and that's where work incentives can really apply. Okay, you can mute people again, Lisa. And as we go on, we'll show you how work incentives can lower countable income, because really what they would look at is not her full wages, but the countable portion of her wages. But that was great. That gives you guys the idea there. So for Title II benefits, people are always required to any Social Security benefit to report working and report earnings. And if you're a representative payee, you're responsible for doing that. So with Title II benefits, you don't have to report monthly, but you do have to report anytime there's a significant change. And you can do that by calling them on the phone. You can take pay stubs into the local office or mail them. If you do that, I would ask for a receipt. You can also register for these My Social Security accounts, which are newer and apparently are letting people report income on there. And often what Social Security will have you do initially is complete what's called a work activity report. And what they ask you in those is kind of, okay, where are you working, how much you're earning, how many hours, to get an idea of your wages. But they'll also ask a lot of questions about supports you receive, and that has to do with the work incentives. So it's good to fill those out, as realistically as you can. Because remember I said Social Security disability work incentives do a few things. They provide safety nets, but they can also lower countable income, and that's where we're going to show you some examples in a minute, and help you maintain health benefits. And just before I forget, if you're not familiar with this, it's called the Red Book. It's a Social Security publication that explains the work incentive programs, and it's I used to think it was kind of complicated, but now I realize that somebody did a really good job trying to take really complicated information and summarize it in a way that makes sense. So you can get the most updated copy at that link here. But we've already talked about some of the work incentives, and these were kind of more the safety net ones: the trial work period, the extended period of eligibility, expedited reinstatement. We talked about continuation of Medicare coverage as one of the work incentives. But there's also some work incentives that apply to Title II benefits that lower countable income. And they're the impairment-related work expense and subsidies and special conditions. There's also a couple that apply specifically to self-employment, and those are similar to subsidies and special conditions, but they're called unpaid health and unincurred business expenses. So let me show you how those work. The impairment-related work expenses, also lovingly referred to as the IRWI, are expenses that meet three criteria: that they're paid for out of pocket, that they're related to work, and they're related to your disability. And what people pay out of their pocket might be reduced from their gross earnings when they go to determine what the countable portion of their earnings are. So think about things that might meet that criteria. Often it might be things like medication copays, or like, say, physical therapy visits, or sometimes it can be transportation, depending on the disability. If somebody's blind or has a developmental disability, they'll generally approve transportation. If somebody has a mental health disability and drives, it just doesn't have a car, they may not approve it. So, because remember, it has to be disability related too. I've seen some pretty interesting things get approved, like, for instance, a woman who had a mental health disability who had a doctor write something that the presence of an aquarium in her office kept her calmer and kept her anxiety down, allowing her to work. So it was work-related and disability-related, and she was paying the aquarium expenses out of her pocket. So it was kind of an odd one, but they'll give you an idea of just how to think about impairment-related work expenses. But money-wise, in the reporting and in calculating whether people are hitting SGA, this is how it works. Let's say this person has $13.50 in gross wages, but they had $100 in a transportation IRWI, and they also had some medical copay. Let's say they were paying copays for medication that reduce seizures or controlled blood sugar, or something that you could relate it to work, because if they didn't have that, they wouldn't be able to work. So in this case, it puts the person's countable earned income down to $11.50 a month, which is under the $12.60, so they keep their full SSDI check. So generally where IRWIs work well with SSDI is when somebody's fairly close to the SGA level. If this person was earning $2,400 a month, reporting that $200, I mean, yeah, they wouldn't count it, but they're still way over SGA, so it's not going to make a difference. It's usually when people are fairly close to SGA, or if they have really high impairment-related work expenses. That's sometimes true. Think about with people who are blind, who might have a lot of reader services, or people who might have a lot of personal care assistance. If they're paying for it out of their pocket, that could make a difference. But oftentimes somebody else might be paying for that too, in which case it doesn't count. Subsidies and special conditions are another work incentive. And what that involves, it's lowering somebody's countable income based on the support that they're receiving that might affect the value of their actual pay. Like, they might be getting a certain amount of pay, but what Social Security is concerned about is the value of your work, not how much you're earning necessarily. They generally call it a subsidy if the employer is providing it, and a special condition if somebody else is providing it, like vocational rehabilitation or a provider agency, something like that. And again, it's used to figure out whether people's countable income is above or below SGA, so they know whether or not to pay them their check. So let's take Fred. Fred's earning $1,500 a month, which is over SGA. He's not blind, we'll say. And Fred has worked at the call center for so many years. He's a valued member of the team. And his employer reports that he receives additional training and supervision on a regular basis. But he's paid the prevailing wage for the job. But the supervisor estimates that most employees make 12 calls an hour, and Fred averages about 9 calls an hour. So when they say, well, how does that affect his countable earned income? They might say, well, if you only counted 75%, because his work productivity is like 75%, even though he's getting paid 100, what everybody else is, they might only count 75% of those wages. Plus they might not count additional wages based on the regular training and supervision he gets that might be in excess of what a typical employee would get. So while he's earning over SGA, the subsidy might keep him getting checks because the countable portion is below SGA. Special conditions work similarly. Again, this is when somebody else is providing the support other than the employer. So let's say that Katie receives SSDI. She's earning $1,400 a month at her job at a local theater, and she earns $10 an hour. So I should say this, with special conditions, with job coaching, how they look at it is not the hourly wage of the job coach, but they base it on the hourly wage of the employee. So if the job coach spends 8 hours a month on site with Katie, they're going to count that as an $80 subsidy. The 8 hours times the $10 an hour that she earns would be 80. So that would lower her $1,400 a month gross wages to $1,320 in countable earned income. But she's still over SGA, right? Because SGA is $1,260 and she's at $320. But she's pretty close there. I would start looking is there anything else that she's paying for? Because you can use IRWIs combined with the subsidy or special conditions. So if she was at $1,320, but then you find out, yeah, but she's paying for transportation too, that might count as an IRWI, it might actually put her under SGA overall. So I'll pause for a minute. That's kind of the quick and dirty on SSDI and Title II benefits. Any questions before we go to SSI? Okay. Don't type them in the chat box and Lisa will tag me if you do have questions. So I'll just keep talking until you stop me. SSI or Title 16, again, is supplemental security income. And again, probably those who are younger, you're going to see more SSI beneficiaries. So again, for people who are elderly, blind, or disabled, they have to have limited income at the time of application and limited resources. And many of you might be familiar with that $2,000 resource limit, both for SSI and for Medicaid. And they haven't changed that in a long, long time, if ever. I don't know that they've ever changed it. So people can't, if any month income is coming in, the month it comes in, it's considered income. But if you don't spend it and it's saved and rolled over to the next month, then it's a resource. So whether it's sitting in a bank account or, in your checking account, or if you buy things with it that could easily be turned into cash, like CDs or things like that, those are considered resources which could terminate your eligibility because you have too much in resources. And some of you may be familiar with ABLE accounts that are a fairly new program that allow people to save money in some special accounts over and above that $2,000 without it counting. But you do have to make sure that your personal accounts are under $2,000 or $3,000 for a couple. So SSI payments are for basic food and shelter. This year, the maximum you can get is $783. There's a few states that have state supplements, but I don't believe Indiana does. So somebody holler if you do, but I don't think you do. Some things that can affect payments that are where you live, marital status, because if two people who get SSI get married, they don't get twice the federal benefit rate. They get 1.5 times the federal benefit rate. So there's kind of a disincentive for marriage there. If somebody else is paying for your food or shelter, they can reduce your rate by 1/3. And really, any other income is going to impact your SSI amount, whether that's earned income, unearned income, or what they call deemed income. Deemed income is just somebody else's money that they figure you have access to. It's deemed from a parent or deemed from a spouse. We won't get into that too much, but I do want to talk about earned and unearned income. So earned income is any money from wages or from self-employment ventures. Unearned income could be a variety of things, but most commonly, it might be Social Security disability insurance. But also things like interest from trust funds, or sometimes there's things like safe claims or unemployment insurance or railroad pensions. There's all kinds of weird things that come up here and there. But often it's Social Security disability insurance that people aren't working right now for that money. And unearned income is counted against SSI pretty much dollar for dollar. They don't count the first $20, but everything over $20 is considered countable unearned income. And that amount is subtracted from the SSI benefit rate, and your SSI is adjusted. So unearned income is pretty much dollar for dollar against your benefits. But with earned income, they want to give people some incentive to work, so they give a little better deal. And it's a formula that they use. They'll look at your gross wages. They won't count that $20 general income exclusion if you didn't have any unearned income to draw it against. And then they won't count another $65. And anything over that, they'll only count half of. So basically, earnings over $85 are going to generate a 2-for-1 reduction in your SSI. Here, I'll show you an example. This person earns $685 in gross wages. They'll subtract the $20 general income exclusion and the $65 earned income exclusion, which brings it down to $300. And then they're only going to count half and divide by 2. So that means they have $300 a month in earned income. So instead of getting $783, like they might have before they were working, they're going to subtract that $300, and their adjusted SSI check would be $483. And you know what people tend to focus on is, oh, what happened? I just lost, $300 of SSI. But remember that they also gained $685 in gross wages. So this person's income went from $783 without working to $1168 with working part-time. And when you're living off that much money, $400 a month difference is a big difference, right? It's quite a bit different. It changes the quality of your life significantly. So we need to help people see like what they're getting, not what they're losing. Work is good. The other thing that happens is at a certain point, and this year somebody would have to earn over $1,651 a month before their SSI would completely zero out. Because the more they earn, the more their SSI is going to down. But at the point they're earning $1,651, cash check's going to go away. But the cool thing is they go into this special category called 1619B. And it basically keeps them on the SSI roll, so if their income goes down, cash benefits can start again. But more importantly, what it does is it protects people's Medicaid. So it's for specifically people who lose their cash benefit due to earned income. If they lose their cash benefit for other reasons, maybe they medically improved or they went over the resource limit, then 16B doesn't apply. But this is a special work incentive to protect people who receive SSI in work to help them keep their Medicaid when they're working. So that's a really important work incentive on the SSI side. So we're gonna practice again. What I want you to do is take out some calculators or a pen and pencil, and we're gonna do a quick little analysis. So Joe was getting his full federal benefit rate of $783, and he's been offered a job of $1,200 a month. So we wanna figure out, what does it do to his SSI payment, and what does it do to his overall income? Let's see. We'll just do it together, okay? So Fred has $1,200 in gross wages. They're gonna go minus 20, minus 65. That brings it down to $1,115. Divided by 2 leaves him about $558 in countable earned income. So now instead of getting $783, they're gonna subtract that. His adjusted SSI check will be $225. But again, his overall income goes up to $1,425. So if you were advising Fred, should he take this job of earning $1,200 a month, would you think he should take it? He's going to keep getting a smaller SSI check, and his income goes from $783 to $1,425. That seem like a good deal? I know you're muted, but yeah, seems like a good deal, huh?
Yeah, we got some yeses in the chat box.
Okay, good. So yeah, so we want to help people think, but you know, and I've seen this before, where I've helped somebody get a job, and the first month that their SSI went down, they kind of freaked out a little bit. You're like, you know. But we have to help people see that that's going to happen. And the confusing thing is it doesn't necessarily happen the first month you work. Because let's say if you started working in August, you're not even going to get all your paychecks probably till the beginning of September. And then if you report early in September, it takes them all month to get it in the system. So that work in August is going to affect October's SSI check, not August. So there's a couple months up there when you start working where you're probably getting too much SSI. And that probably seems good, like, hey, I get my full SSI and I get my full paycheck. But at the rear end, if you stop working, it also takes 2 additional months for your SSI to go back up to the full amount. Because when you stop working for 2 more months, your payments are going to be based on the months when you were working, not when you weren't working, which could cause a problem for people with paying rent and things like that if you don't plan for it. And that's why I think benefits planning is really, really critical in transition planning, is that people need to know that. They need to know that, you know, if they stop working, it's going to be a couple months before their SSI goes back up to the full amount. And maybe there's some things they can do to that. Maybe they can prepay some rent or some other things that might help them with that, or put money aside in their ABLE account in those months where they get full SSI and full wages, to set some of that aside in an ABLE account so that they're able to pay their rent when they need to. Some people we said too, are called concurrent beneficiaries, who get both SSI and SSDI. And the reason is that generally their SSDI benefit is lower than the SSI amount. So they get their SSDI, and then basically SSI makes up the difference. And because they get both, because of this general income exclusion, people who get both generally end up with an extra $20 a month. And it has to do with the general income exclusion up here at the top, that you'll see that they take away that $20. So there's really only $457 of countable unearned income. That's what gets subtracted. So really they end up with extra 20. But with concurrent beneficiaries, they have to follow both sets of rules. And you really do have to treat them as 2 separate programs. And, people sometimes say to me, but I reported to SSI every month. But SSI they're not responsible for reporting it to SSDI. The beneficiary is. They have to report to both programs. So in this case, let's say John gets $477 a month in SSDI, which would make him eligible for $326 in SSI, because together they should equal $803. But he starts working, and he's not earning very much. He's only earning $500 a month. So the first thing we say is always look at the SSDI side first. What happens to his SSDI side? We can say, well, nothing happens to it because he's not even using a trial work period, right? It's not earning enough. But on the SSI side, it does still count. So SSI, they don't take away the 20 here because it basically came off over here. So we just do minus 65 divide by 2, and we're going to subtract that 217 from the 326 in SSI that he's eligible for. So it always is coming off the amount that somebody's eligible for. He's not eligible for the full 783. He's only eligible for 326. So it's going to adjust his SSI check down to 109. But again, what happens to overall income is really the question. And really between the three, 500 in wages, 477 in SSDI, and 109 in SSI, he has almost $1,100 a month, which is significantly more than he had before. So working is usually good. It's usually a good thing. For SSI recipients, they do have to report monthly because their wages are going to change monthly probably. And even if they stay the same, they still are required to report monthly. And they can do that in a few ways. You can either take or mail your stubs to the local office, or there's lots of new options. There's the registering for the My Social Security account. And SSI also has a mobile wage reporting system and a telephone wage reporting system that I think are still only available to folks who receive SSI only. If you get both, those may not work for you. So just know that there's some different options there for reporting, and depending on who's doing the reporting, you might help people sift through what's easier. If it's a rep payee who's who's good with the reporting apps, they might want to use the app. Somebody else might be more comfortable with just mailing the stubs to the office. I do always encourage people to keep a copy of their pay stubs, just so you're not letting go of the only copy you have. I think it's just good practice to get students and families into, is just keeping track of all their wage stubs and all their Social Security communication. So with SSI, there's also some work incentives. We talked about some of them, that $20 general income exclusion and the $65 earned income exclusion. 1619B is a big one because it helps people keep Medicaid. But SSI also has some ways to lower countable earned income. And some of these work incentives are specific to a certain population: students, the student earned income exclusion, and the blind work expenses obviously are specific to people who are blind. So what the student earned income exclusion does is really, it allows people to not count. If the person meets the definition of a student and regularly attending school, and they're under age 22, that SSI will just kind of exclude a whole bunch of their wages right off the top before they even do that other calculation. They'll exclude up to $1,900 a month for a maximum of $7,670 a year. So people can, that's probably about 4 months of full-time work at minimum wage if somebody has a summer job, or if they're working throughout the year, it works into about $600 a month. That doesn't count at all. So really, while people are in school and receiving SSI is a great time to work and try out work and see how that feels. It's also one of the indicators is if people will work as adults is whether they worked while they were in school, whether they had paid work while they were in school. So I think it's a really important thing to strive for and to try to get into IEPs is paid work experience of some sort. And again, if people are working while they're in school, they're earning credits that will eventually get them on SSDI, which has some advantages. Parent-related work expenses also apply to SSI. We talked about them with SSDI too. It's the one work incentive that kind of covers both. And while the definition of this is the same, it's counted a little differently because with SSDI, we just counted it against their gross wages to see if people were under or over SGA. But with SSI, they're looking at it for a different reason. It's really the reason is how much money do we pay the person this month? So it gets calculated into the standard calculation. So we'll go ahead, like without an IRWI, they would look at the gross wages and subtract the 20 and 65 and divide by 2 to get to the countable earned income. And then they'd subtract that from their SSI amount. But with an IRWI, where it comes out, they call it an above the line deduction, meaning that it gets subtracted before they divide by 2. So in this case, let's say the person's gross wages are $10.50 a month, and they have $200 in things that would count as IRWIs, and they report that to SSI along with their wages. What ends up happening is that $200 that they spent, they end up recouping 100 of it or half of it in their adjusted SSI amount. So they don't get it all back, but at least they get half of it back. And if it's something that they're going to be paying for anyway, like transportation or things like that, then they might as well get half of it back. Why not? Blind work expenses are kind of like IRWIs, but they're a little different. I mean, they only apply to SSI. This isn't an SSI thing. It's only SSI. They do have to be paid for out of pocket, but they're broader than IRWIs in that they can count some things that beyond just disability and work-related kinds of things. And it's used to reduce countable income, but the kinds of things that might count are like expenses related to service animals or transportation to and from work. They can even deduct federal, state, and local income taxes and Social Security taxes. That's a big one. Attendant care services, some things, like kind of would count as an IRWI too, but, things like visual aid, sensory aids or attendant care services or translation of materials into Braille, but also things like professional association fees and union dues can be deducted. Even meals that someone eats at work can be deducted against their gross wages to get to their countable income. And this can really, I mean, I've seen people get SSI who make pretty good money, but they still get SSI because it lowers their countable income so much. So the difference here too is not only what you can deduct, but where it's deducted, where it falls in the formula, where I said IRWIs are an above the line deduction. They take them out before they divide by 2. Blind work expenses are a below the line deduction, meaning they divide by 2 and then they subtract the amount of the blind work expense. And the net effect is that if you have, say, a $200 blind work expense, you recoup it all back in SSI instead of just half of it. So if somebody meets the statutory blindness criteria, this is a really, really critical work incentive if they receive SSI, because it can really help lower countable income and maybe keep access to SSI or, keep access to more of it or longer or things like that. The other thing I want to talk about, we're going to talk about PASS next. And this is the same way that PASS is calculated, which is one of the cool things about PASS is that people recoup all of the money that's set aside. So last section here, last work incentive is on plan to achieve self-support. And PASS is one that does require an application. It's somewhat time limited, but how long it can last depends on your work goal. So it's with PASS, you do an application and you say, this is my work goal and this is what I need to get to my work goal. And if Social Security approves it, then they'll let you set up a separate account and shift some of your own money into that account each month. And by doing that, by shifting money into it, it either increases your SSI, or it could even make you eligible for SSI if you weren't before, so that you have money to live on while you're using your other money for your work goals. So I'll show you some examples of how that works. First, let me just show you some ways people have used it. This is Debbie, and Debbie got a job filing paperwork for a company that sold cell phone programs, and they had a mess with their paperwork. The paperwork wasn't getting filed because the customer service reps were making commission when they were selling phone packages, and they weren't making commission when they were filing. So when we negotiated the job for Debbie, it was based on the employer's need, you know, that they had a need to get this filing done, and all the filing was done by phone number, and she had really good number matching skills. So we negotiated the job for her, but we knew she needed some employment consultation, and at the time she was eligible for VR services, but because of what was happening with our Medicaid waivers in the state, there was going to be a gap before she had any long-term support services. So we used it to pay for some services that typically maybe Medicaid would have paid for. We also found out really quickly that she needed a lot of help transitioning from task to task throughout the day. It was silly to keep a job coach there to do that. It was more cost effective to pay the employer for a little bit of a coworker's time to help her transition from task to task. And it also helped her with some transportation and office furniture. This is Simone Renee, and Simone is deaf and has a developmental disability, and her initial work goal was to become a nail technician, and she went to school, and it was really hard, but she got through the test, and she is indeed working as a nail technician now. Oh, I should say too, but in these examples, what people can put into a PASS is money other than SSI. So they can't put SSI into a PASS. So let me go back to Debbie for a second. Debbie was working, so she had SSI, but she also had wages. And those wages were going to reduce her SSI. But if she took the countable portion of her wages and set it aside into a PASS account, her SSI went back up to the full 783. So it was money she was going to lose anyway if she didn't put it in a PASS. And that PASS got her about over $14,000. For Simone Renee, she's in the same boat. She has SSI only, and now she's working as a nail technician, but her goal is to become a full esthetician so that she can provide other services like waxing and facials and things like that, which would make her more marketable. Right now she's working only part-time because she can only do nails. That's all she's certified to do. And she wanted to use her PASS to go back to school to get those other certifications. And to do that, she needs tuition, she needs some interpreting and tutoring. There's a licensing fee, and she has to go to Portland, she has to go to clear to the other side of the state to take the test, which is going to require travel and overnight stay and interpreters for that too. So we initially had her PASS approved for about half of that amount, probably about $9,000. And we just amended it and got another $8,000 to help. COVID's kind of changed how everything's going with her school program. So, but this is again, money that she would have lost anyway. So it's really a cool thing for her to be able to do that. I'm just checking the time. Okay. Also people who have SSI and work part-time but have a loftier goal are good candidates for a PASS. Also people who get SSDI only could be good candidates for PASS. And it's kind of weird because PASS is an SSI work incentive, but sometimes it's people who have SSDI who are the best candidates. So an example where, I'm sorry, I pulled up the wrong copy with no picture, that Alan's goal was to work with plants, and he wanted to purchase a greenhouse and start selling, growing ground covers and selling them to nurseries. He was able to set aside his SSDI to use for the things that were approved in his PASS plan, including like a greenhouse and some inventory, some plants, potting soil, marketing assistance. So his SSDI is going to pay for that. And because SSI doesn't count that as income while it's in a PASS, he now became eligible for SSI and had what the equivalent of this year would be $783 to live on. So he gets to use his SSDI for work goals, but he gets to keep the SSI money as well. So both come in each month. It's full SSI check, full SSDI check. He has to transfer his SSDI into a special account just for PASS money. He still has money to live on. And he had over $21,000 approved in his PASS. Oh, here he is. Okay, just got an extra show in there. So that helped him purchase that greenhouse and some other things he needed to get started. Who are often, okay, so people who get SSI and wages are good candidates. People who get SSDI are often good candidates. The one thing I would say is that if people get very large SSDI checks, let's say somebody gets $1,600 a month in SSDI, they can set aside all but $20 a month of that into their PASS. So they have a big PASS contribution, $1,580, but they still have to be able to live on the SSI amount. And I usually find if people are used to living on $1,600 a month, they might be able to live on a little less, but they probably can't live on $800 a month. So that would be a discussion to have. Usually people with really high SSDI checks maybe aren't such good candidates, but people who maybe get a little over the SSDI, like if somebody gets $800, or well, let's say like $820 a month in SSDI, they can put $800 a month in. They keep $20 of their SSDI, they get the full $783 in SSI. They have $803 still to live with. They have almost as much money, and they have all that money to work with too. So who are typically even the best candidates are those who are concurrent beneficiaries, those who get both, for a couple of reasons. I mean, A, they're already SSI eligible, right? So if somebody gets SSDI only and they have to apply for SSI, they're now making them go through a new medical review, which can slow things down a few months. So concurrent beneficiaries are already eligible for SSI. They're already used to living on the SSI amount, so there's not this big reduction in income that you might have with SSDI. And it's very easy to show to Social Security that they're going to be more self-supporting. So how Social Security defines self-support is really what it means is we're going to pay you less benefits as a result of you getting to your vocational goal. So for people who get SSDI only, they really have to kind of show that they're going to go off of SSDI because that's the only way that they're going to be paid less benefits because it's an all or nothing kind of thing. But with people who get both, they'll see that reducing SSI meets that criteria. They're going to be paying them less as a result. So this is David. David's blind and has a brain injury, and in our state, he just kind of falls through the cracks on long-term support services. He doesn't qualify for supported employment for Medicaid-funded long-term supports. So he used his PASS both to help with getting his small business going, his vending machine business, but also for his own training and support. So it bought equipment, but it's also buying the support he needed long-term. We had the Commission for the Blind kind of helped him get started, but they had to phase out. And he had, close to $11,000 to put towards that. So PASS is a really, really awesome work incentive that's very, very underutilized. So I hope people will consider that as they go through it. And I wanted to end just talking about resources for benefits and work incentive planning. That we have these family sessions coming up. We also have something called Ticket to Work and something called WIPA. So the dates for the family group discussions I have posted here. I think Lisa, do you want to comment on this, or are you going to be sending people information?
Only to encourage people to find some families who are interested and have them register. We don't have very many who have done that yet. I also am going to put the flyer in the chat box real quick here. Maybe.
Okay.
Not done that yet, so it's a new experience.
Okay. So while she's doing that, just know it's just going to be an informal chat. We've got 3 different times at different times a day, so that if family members want to ask some questions about benefits, it's just an open discussion, really. Nothing formal at all. Another resource is Ticket to Work. And what Ticket to Work is it's a program for Social Security beneficiaries to help them connect with a network of employment providers that they call employment networks, or ENs. And ENs can provide a range of services. And some ENs provide benefits and work incentive planning assistance. So that's one of the reasons people might want to connect with an employment network. People also have the option of working with vocational rehabilitation and partnering with another employment network. So people might work with their state VR initially to help get them going and get them working, but then VR closes their case. So they could transfer their case to another employment network for more ongoing support. And there's more information here at this choosework.net. If you go in, you can even, it says, what's it say, find work now or find resources now, something like that. You can type in your zip code and find benefits planning assistance in your state that we call WIPA projects, but also ENs that might provide those services. And the third thing is what we call WIPA, generically called WIPA projects, work incentive planning assistance projects that are funded by Social Security, and most states have them. It's a free service that helps you get individualized access to benefits planning. But the way you actually access WIPA programs now is through the Ticket to Work site. So the Ticket to Work people kind of act as the triage people. They sort of collect some initial information and then figure out how intense your needs are, if they can just send you some general information, or if you really need to see a benefits planner. And then, as I understand it, if I'm understanding this correctly, and please somebody help me if I'm not, that in Indiana, you have some additional benefits planners that are funded jointly by Indiana Vocational Rehabilitation and the Center for Community Living and Careers. And does anybody on the phone have knowledgeable about BIN that might want to comment on that? Okay, lots of states do that. They have their WIPA projects, but they only fund a few positions and then they get really overworked. So a lot of states have created their own benefits planning system as well. Ours is called WIN in my state, yours is called BIN. But those are all resources for Social Security beneficiaries and their family members to get more individualized planning assistance. So, ooh, almost right on the button here. Any questions regarding any of that?
I don't see any questions yet, although I did see a couple of folks pop up saying that they are either a BIN or a BIN project coordinator in the chat.
Oh, awesome. Would you maybe unmute yourselves and just talk a little bit about BIN?
Maybe not.
Or how people can access BIN?
For me, I usually get my BIN, the people that come to me with BINs are people who are through VR. And so I work with them through that. I also work on the ticket to work side as well. And I have been able to use what Stephanie and those wonderful people have been able to teach me to help my ticket to work participants in that side as well.
Okay, are you a provider?
Yes.
Okay. Okay,
I also
so
am a
you're,
PREETS instructor, so I cover
what
all
is-
of it.
okay.
Hi, Janet. This is Stephanie
There
Gage.
she is.
Sorry,
Hi, Stephanie.
as many of you guys do, I have a child at home, so I had to get to a room where she was not.
Yeah, gotcha. It's my cat, but.
Yes, I am the BIN project coordinator at
Awesome.
Steveley at IIDC. So we have about 150 BIN liaisons throughout the state that work for different agencies and providers that can give direct benefits counseling to individuals that are working with VR.
150 statewide?
Yeah, which
That's
really,
awesome.
we work in combination with the WIPA project. Once an individual meets their priority list, you know, they have certain priorities because there's only 6 of them, individuals that can work as a CWIC right now in the state. So we, you know, working in coordination with them. And a lot of times we can provide initial benefits counseling. And then when they're ready to go to work or for that more in-depth benefits counseling, we can forward them on to the WIPA project.
Awesome. Awesome. So for like a transition age student who's, you know, in transition planning, people are starting to want to pull together some information. Would it make most sense to contact the BIN, the Benefits Information Network first?
It kind of depends. The transition age youth actually do meet the priority for WIPA. So they
Okay.
can work directly with WIPA, or if they're working with vocational rehabilitation, you know, a lot of times they're able to connect with a direct provider that they're already kind of comfortable with and get the benefits counseling with them as well. So either way, we just want to make sure that people are getting information.
Okay. Okay. And I think, did I have the, yeah, this is the correct link to where people would get connected or get information?
Yes.
Okay. Okay.
Thank you
So
for including
I'm not
that.
sure. Well, and thank you. Thanks for putting it in here because this all works a little differently in each state. So I don't want to give anybody bad information, but it's really I think critical in transition planning that we start addressing questions that students and families have, and you know, and obviously there's a lot to learn here, and people aren't, you know, if this isn't your job that you do every day, it's really hard to retain it. So getting people connected with the people who do it every day is really important. And I think that's wonderful. You have 150 folks out there over, you know, on top of the WIPA project. That's great. Because in some states, I know it's really, really hard to get access to benefits planning, and it's critical, you know, because people get scared if they don't know what's going to happen. And, you know, we don't want young people like losing opportunities just because they didn't have access to good information. So any other questions or comments?
I don't see any questions. I did see Erica said she learned a lot, and thank you.
Thanks, Erica.